Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's a bit of a status quo in terms of that conflict. Sixth day now between Israel and Iran, and no end in sight, no off-ramp in sight. I think the big takeaway, of course, is the jump in oil that we've seen, about 5% overnight. Of course, we'll track all of that and more. I'm Prashant, with me, my colleagues Nigel and Mangalam. Guys, hi, morning.
Good morning, Prashant. We're none the wiser from yesterday. Yeah. In fact, we were hoping for some sort of truce to take place or some sort of deal to come by. We saw the US CBOE VIX decline as well yesterday at start. But now this morning, we're back to square one, 13% higher on the CBOE VIX. And we still don't know where things will be.
Well, that's right. And, later tonight, we'll hear in from the Fed chair as well. So that'll be the other big cue that we'll be tracking. And things have got even more uncertain, on the global front. So it'll be interesting to see how the Fed chair is viewing it.
Absolutely, and I think the decision, the press conference and all of that will be in focus as we come back tomorrow. Let me just quickly run you through a bunch of things as we begin this day. And I'll just start with the price action, right? I mean, so you have oil, which was up 5% last night and near 77, by the way, so 76.5, 77. So basically bouncing around there. S&P was down about 0.84%, and you have the dollar index, which surged to almost 99. It's about 0.8, 0.85% higher. So the news was largely with regards to the Israel-Iran conflict, and it kind of sort of intensified further. Bloomberg said that US is deploying more military assets to the region. Remember, they've got 2 large aircraft carriers and, of course, a bunch of refueling aircrafts, etc. as well already there. So they're deploying more. President Trump met with his national security team. Immediate exact plans in terms of what the course of action was not very known, was not telegraphed one way or the other. Although President Trump did demand on Truth Social for Iran's unconditional surrender. So a bunch of these posts, right? He also warned of a possible strike against Iran's supreme leader, Ayatollah Khamenei, but said that we're not going to take him out, at least for now. So those are some posts which were put out, at this stage in terms of communication being conducted on social media. Many things were unprecedented, as unprecedented times. This is one of them. But I think that's where we are at now. Later tonight, as we were discussing, FOMC and of course Powell's press conference in terms of how he views. I don't think there's going to be very much clarity there as well. No move is expected. But the point is, do they have a clear idea? U.S. economy is still strong, but it's expected to slow down in the second half because of tariffs, etc. And the tariff rate, of course, is still a moving thing. Effective tariff rates, if you ask U.S. economists, around 13% compared to 3% when Trump took office. But that 13% is not static. I mean, that number perhaps will change. So in that sense, how much will we learn is the question. But I think will be important as we come back tomorrow. You also had a bunch of macro data last night, retail sales, etc., which were slightly on the weakish side. I'll just tie in the levels here. So the Nifty yesterday failed to break and sustain above the 66% retracement level. And we closed almost exactly at the 20-day moving average, which is 24,841. 853 is where we left off at. So that's a bit of a pivot level. But, 20-day, we're looking at very near term. So I think better to look at some, recent highs and lows. So the recent high, the resistance comes in at the recent high, 24,982. Which is the recent high, becomes the natural kind of resistance. That's yesterday's high. And of course, support comes in at 24,473. It's nothing but the lower bound of the range that we've been in. So keep an eye out on that. The Nifty Bank failed to cross the 40-hourly exponential moving average on a closing basis. Here the resistance comes in at about 56,067 and the support level comes in at 54,200 on the downside. So it's a slightly broader range. But that's where we are at. GIFT Nifty will give you a quick sense of how we're likely to start before we go any further. Again, something like what we saw yesterday, neither here nor there, about 40 points down. Mangalam.
Yep, absolutely. Take that point. Yesterday as well, at the same time, the GIFT Nifty was indicating a 37-point downtick. No change out there. Wall Street, like you pointed out, saw a bit of a decline in overnight session. The Nasdaq, which we thought should outperform after the outperformance that we saw in the previous trading session, actually was the underperformer. And the Asian pairs as well. If you look at the Asian markets, they've opened fairly mixed, slightly on the lower end as well. Specifically for Hang Seng, which is down about 1.3%. And the CBOE volatility index, which was down 8% in yesterday's trading session, actually spiked about 13% as the uncertainty continued as well. The street expects no rate change from the US FOMC outcome. The commentary will be extremely crucial to track. And, you did speak about the May retail sales that was below expectations, but Japan May exports as well fell by about 1.7%, which is the sharpest decline that we've seen in the last 8 months. So across the globe, there is some slowdown that we are seeing, and this at a time when crude has spiked to around $76. The Indian indices saw a decline. Yesterday, they opened with more stocks advancing than the number of stocks that were declining, and that reversed sometime in the middle of the trade, and thereafter we ended with way more stocks declining than the number of stocks which were advancing. The only outperformer was the IT index. Let's see whether that holds on in today's trading session or not. Both the FIs and the DIs bought in the cash market, but a large part of that was because of the large trades that took place. We were speaking about Vishal Megamart, Zydus Wellness, where TPG Capital sold as well. So, we'll have to watch out for the institutional flows too, the pivot levels. We have the 20-day moving average, both the Nifty as well as the Nifty Bank. Nifty Bank slightly below the 20-day moving average, the Nifty slightly above that. So where do we go from here will be extremely crucial. And the one stock I'll be tracking today would be BSE. Why is that? Because we've been pointing out, right? Yash had broken that story that the NSE has given, the approval, or the SEBI has given the approval to NSE for Tuesday weekly options expiry. But if you look at the BSE stock, it's fallen from over 3,000 to around 2,600. How much of that is priced in and how the reaction will be today would be extremely crucial to track from a stock-specific standpoint. But Nigel, over to you.
Well, the markets continue to remain in a bit of a range, but the cues that you're getting overnight is suggesting a bit of a risk-off, though I think that band will continue to remain because you have Brent crude prices that have spiked up. The 10-year yield on the US bonds, well, they are holding at around that 4.4% or thereabouts, and the dollar index has strengthened overnight. That's typically a bit of a risk-off that'll play out. So a range is what I'll be working with. What happened in terms of the FI as well as the client action on index futures? Well, both of them added some long positions, and there was some mild short covering that we saw from both those two participants. How are the FIs positioned? Well, 21% of their positions on the long side, 79% of their positions on the short side. So they're pretty much still very much, net short with close to under lakh contracts on the short side. So in case you get a positive trigger, then these guys will be running for cover on the short side. So we'll keep an eye out on that front. But for the time being, we're searching for that positive trigger. Another, positive that I'm looking at from the options data is the kind of writing we have seen on the put side. And that's giving you a sense that at least in the near term, the bulls believe they can protect those recent lows, 24,500 or thereabouts, which brings us to the options data. The call writers are getting very, very confident. The bears believe that they've got this covered on the upside. They don't believe that 25,100 level will get breached. And just take a look at the writing you've seen. Between these two strikes, it was close to around 70 lakh shares that were added. Moving to the levels that we're working with, for today, well, the resistance comes in at around the 25,000 mark or thereabouts. The reference point that we ended closer to yesterday was around the 20 DMA. You don't want this level to get breached decisively on the downside. But otherwise, this broad band that I've been talking about for the last 1 month or so, we expect to continue in that range. I'm focusing on the two indices as well, which constitute a large part of the market. The IT index. In the last few trading sessions, it's done very, very well. It's up close to around 5.5%, and that's encouraging because you have been seeing some kind of buying out there, though it's been a relative outperformer for the year so far. Overnight, the Nasdaq was a little under the weather, so let's see whether or not that gives some part of it back. So I'll keep an eye out on that. And the Nifty Bank, if we need to see a fight back today, I think the Nifty Bank needs to participate. There are signs that there are some buying at lower levels, and I think the recent low at around 55,100 is the important mark you're looking at on the downside. That is when very, very close to the 20 DMA. So you don't want the Nifty and the Nifty Bank, both of them, to break the 20 DMA decisively. Stocks that I'm looking at, well, the Vedanta Group stocks are going to be in focus. Vedanta for the last few days, going by the global turmoil, it's been quite solid. In fact, it's up close to around 2.5%. It's been a relative outperformer just in the last 1 week or so. There's a crude play out there, valuation supportive, as well as now you have a large trade that's taken place. So Vedanta should be in the positive terrain and see a bit of an outperformance continue out there. But Hindustan Zinc will be interesting because you have a massive open interest build up. The street was sensing there's going to be some kind of supply. maybe they were working with an OFS route. Now, if that large trade that takes place, that's the block takes place in pre-open, well, I'll keep an eye on this stock. The shorts may have to run for cover. Massive open interest built up, not just yesterday, but over the last few days. So both these two on my radar, guys.
All right, no, absolutely. Last night you also had these US solar stocks which sold off very hard. I mean, between 20 and almost 40% in some cases. And that is on the back of, Senate Republicans moving a bill which ends clean tax credits for solar companies. So First Solar, which is one of the largest players, was down some 30%. Typically this is not new, but the point is when we've had those kind of reactions in the US, here in India as well, some of these recently listed stocks have taken a bit of a knock. So keep an eye. We'll talk more about this with our guests. But let's